guys, Brian Stevens with the National Real Estate Post. Pretty straightforward here. How you conducted your business in the past is going to be different than how you conduct it in the future because our market and the industry is going like this, changing right before our eyes. If you want to know what you can and should do, listen to Carl White's interview with one of the top members of the Mortgage Bankers Association, where they discuss the changing market and the things that a loan officer can do to be competitive tomorrow. It's actually pretty cool and it's free. Click this banner right over there. So we're all about learning things on this show. That's the idea. Every day we want you to leave with a better understanding about all things real estate and mortgages. Today, is no exception. Despite higher interest rates, non-QM lenders are still going forward with PLSs. Let the learning begin.
PLSs are private labeled securities, and those are mortgage-backed securities that are securitized mortgages that do not conform to the criteria set by the government-sponsored enterprises Freddie, Fannie, and Ginnie Mae.
It's really kind of simple. It's like Chris Martin from Oaktree said on our show a few days ago. Non-QM lenders like Oaktree offer non-conforming loans. Non-conforming loans, by definition, are loans that do not conform to the norms. The norms being conforming loans offered by Fannie, Freddie, and Ginnie. PLSs fall outside of the norms. That's what non-QM qualified mortgage lenders are offering. And as the article says, despite rates being higher, quote,
according to super guru mortgage genius Rob Chrisman, the Fed has created demand destruction by increasing rates, and there's an argument that it's also created supply destruction for the PLS and loan trading markets because there are millions of people locked into low rates. At current lending rates, 99% of American homeowners have no incentive to refinance their mortgages. 1 year ago, about 66% of the universe had incentive to refi.
Why would non-QM lenders continue offering PLSs if demand for those type of loans has just fallen off the map? Well, I give you Exhibit A, I give you Exhibit B, and I give you Exhibit C, and I rest my case. Somebody who can ill afford all of these items is going to buy them anyways, and they're going to finance them despite the dire financial ramifications of doing it. Do you know that there are people, and a lot of them, that bought a house over 2 years ago with rates in the 2s and 3s, and they were fixed rates, who upon closing had a back-end debt and housing expense ratio of 43 or less, who now can't afford the house that they're living in, and this is regardless of inflation.
I refinanced with that damn adjustable rate mortgage. The dancing lady in that pop-up ad looked so friendly. How could I know it would shoot up to 21%?
Why? Because they bought things they can't afford, and you can't just give that junk back and say, my bad. No, the only way out is to try to find monthly expense relief, and like it or not, a 6% non-QM PLS might be the only way for these folks to stay in their homes. So there is a market for these PLSs. It's just incumbent upon the loan officer to find these type of clients. Here's a thought. If you want to catch a fish, you don't go get your deer rifle, your collar, and your camo, right? If you want to go shoot a deer, you don't bring your fishing pole. All deer, fish, and erratic spending homeowners have a profile, and if you know what you're looking for, you can catch, kill, and close all of them. But you gotta know what you're looking for.
Not to mention, the non-QM private labeled securities are still the only loans on the table for self-employed and contract workers. Those are alternative or alt-doc loans that qualify on bank statements, 1099s, or in the case of DLCS, qualify on the income earning ability of the home. In short, all ways to qualify that are completely outside of your conforming and FHA, Fannie, Freddie, and Ginnie loans. So is there a market for PLS loans? The answer is a resounding yes.
So it's pretty simple, guys. If you want to do some hunting, you got to get your pole, get your gun, and get your telephone and your computer and go out there unencumbered or straddled by all the nonsense surrounding our industry and the world today, and do some hunting, fishing, and funding today, because at this rate, looking around at things these days, we just don't know if we're going to be able to do it in the proverbial tomorrow. I hope this helps.